You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 29th day of July, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one, that's our live trading room, and that's reserved for members only and those who are taking our 1-week free trial. When Michael comes on a little later, he will walk you through the steps of taking the free trial. There's no credit card required. And when you take the trial, you're not just getting access to the live training room, but you're getting access to everything our passport holders have access to. In fact, during your 1-week free trial, we will treat you just like a passport holder. You'll have unfettered access to everything, except, of course, the members-only workshop on Thursday night. Other than that, you have a clear head, 4 foot in the bill. Like I said, no credit card required, because we want you to be able to focus on what's being taught, on the resources that are available to a passport holder, so that at the end of the week, you can make a well-informed and intelligent decision. Now, when the live training room ends each morning at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's a couple different ways you can join this afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com, scroll down to where it says Noon Broadcast, click the link, fill out the 30-second registration form, and you're done. What'll happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In that email, there's a link, so at 12 noon Eastern, all you have to do is simply click the link in the email, and it'll automatically log you into our platform. The benefit there is you will have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, you can't join live, but you want to get caught up later. You can do both of those things via our YouTube channel, which is really easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, so really you just need to remember CFRN. Now, not only do we broadcast live every trading day on our YouTube channel and our platform at the same time, it's called simulcasting. All right, how fancy. Not only do we broadcast live, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. Just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, month, year. Obviously, the more recent broadcasts are going to be more relative to what's happening in the markets and the world right now. YouTube.com/CFRN. This is our daily schedule. We open with a devotional, word of prayer, then we get into some market news, then we get into a recap of the Logic 247 alerts, the concierge trade alerts, and then Michael joins us about 12:50 and gives us a recap of what happened this morning in the live training room. And then at the top of the hour, 1 p.m. Eastern, we go live on the TradingView platform and do some live trading for 30 minutes. When we're finished there, I come back and finish the recap of the alerts if I have not already. And then I wrap everything up with our good word for the day. Now, we finished our 5-day Bible answer book devotion last week. Friday was the final episode. So we're starting a new topic this week. The armor of God. Today's scripture is Ephesians 6, verses 10 through 18. I'm going to share with you from the Message translation. Starting in verse 10. And that about wraps it up. God is strong and He wants you strong. So take everything the Master has set out for you. Well-made weapons of the best materials. And put them to use so you will be able to stand up to everything the enemy throws your way. This is no weekend war that we'll walk away from and forget about in a couple of hours. This is for keeps. A life or death fight to the finish against the enemy and all his dark angels. Verse 13, be prepared. You're up against far more than you can handle on your own. Take all the help you can get, every weapon God has issued, so that when it's all over but the shouting, still be on your feet. Truth, righteousness, peace, faith, and salvation are more than words. Learn how to apply them. You'll need them throughout your life. God's word is an indispensable weapon. In the same way, prayer is essential in this ongoing warfare. Pray hard and long. Pray for your brothers and sisters. Keep your eyes open. Keep each other's spirits up so that no one falls behind or drops out. Again, that was Ephesians 6, verses 10 through 18 from the Message translation. Now, the whole armor of God. We're going to start with the belt of truth. In the intricate tapestry of spiritual warfare, the belt of truth is the foundational weave that holds the armor of God together. Like a sturdy belt securing a warrior's armor, truth forms the bedrock of spiritual preparedness. As mentioned in Ephesians 6:14, this divine accessory represents an unwavering commitment to honesty and authenticity in the face of life's challenges. Just as a belt tightly encircles the waist, the belt of truth encircles the core of our beliefs, safeguarding against the unraveling of integrity. Just as a warrior's belt ensures readiness for battle, embracing truth empowers believers to stand firm against the subtle deceptions of the adversary. Join us this coming week on the exploration, the belt of truth, which is just one pivotal piece in the armor of God, binds our spiritual armor and anchors us in the unchanging veracity of God's Word. Now, the scriptural foundation for the belt of truth is in Ephesians 6:14, where believers are urged to stand firm then with the belt of truth buckled around your waist. This metaphorical imagery emphasizes the indispensable role of truth in spiritual warfare. The belt length and stability signify a commitment to absolute truthfulness, grounding believers in God's unchanging truths. The scriptural basis underscores the need for a firm foundation to combat the deceptive tactics of the enemy, ensuring that one's spiritual armor remains securely fastened and prepared for the battles of faith. Now, there are practical ways to embrace and live in truth. And I mentioned the word integrity. I'm sure you have your own definition for the word integrity. But one I heard years ago, and that has stuck with me and has become my definition. Integrity is what you do when nobody else is watching. Honesty impacts relationships and your own spiritual well-being. In spiritual warfare, the belt of truth emerges as a foundational element, anchoring believers amidst the tumultuous challenges of life. Ephesians 6:14 unveils its significance, urging us to stand firm with truth as our buckled belt. The belt, a humble yet crucial component of a warrior's attire, metaphorically holds everything together. Similarly, the belt of truth functions as a unifying force, securing the integrity of our spiritual armor. This symbolic binding signifies more than mere adherence to factual accuracy. It represents a commitment to unwavering authenticity and transparency in our faith journey. Truth serves as the bedrock for spiritual strength. It is not merely a set of principles, but a dynamic force that fortifies our resolve against the deceptive currents of spiritual warfare. Just as a belt provides stability, truth provides a firm foundation, ensuring our standing in the face of adversity. So how do we apply this in daily life? Living in truth extends beyond doctrinal affirmations. It permeates our daily existence. Embracing truth involves aligning our thoughts, words, and actions with God's unchanging standards. In relationships, honesty becomes a cornerstone, fostering truth and intimacy. Spiritually, the belt of truth becomes a shield, deflecting the arrows of doubt and deception and grounding us in the certainty of God's Word. The belt of truth is not a mere accessory, but a dynamic force holding together the fabric of our spiritual resilience. As we fasten this belt daily, we fortify ourselves against the storms of spiritual warfare, standing firm in the unyielding power of God's eternal truth. Join me in a word of prayer. Heavenly Father, we come before you today, seeking your strength and protection. As your word in Ephesians 6 reminds us, help us to be strong in the Lord and in your mighty power. Equip us with the full armor of God so that we can stand firm against the schemes of the enemy. Grant us the belt of truth, the breastplate of righteousness, and the readiness of the gospel of peace. Shield us with faith and protect our minds with the helmet of salvation. Arm us with the sword of the Spirit, which is your word, and teach us to pray in the Spirit on all occasions. Help us to remain vigilant and steadfast in our faith, always relying on your strength and your guidance. It's in Jesus' name we believe and pray. Everybody said, amen. Amen and happy Monday. Hope you had a great weekend. Whatever you did. Let me give you the numbers from around the world. We'll start in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow up 39 points, the NASDAQ up 110, the S&P 500 up 23. The Russell 2000, our man in the street, is down 18 points, and for the Russell, it's almost 1%. And the commodity basket, crude oil, down $1.30, trading 75.85 last. That's a drop of 1 3/4%. Gold down $7.10, trading 23.73.90 last. Silver down 31 cents, trading 27.70 last. That's a drop of over 1%. In the Asian markets at the close, the Nikkei posted a gain of 801 points. That's a little over 2%. The Shanghai gained not quite a point. The Hang Seng added 217 points, which is a little over 1 1/4%. And in the European markets at the close, FTSE up 6, the DAX down 96, and the CAC down 73. For the CAC, that's basically down 1%. So, that gave us a green day in Asia. It was a mixed day for the UK. And at the moment, it is a mixed Radio Monday here in the US of A. We've got 3 of the major indices in the green, not by a lot, but in the green. The Dow, the NQ, the ES, but the Russell 2000 is in the red. And when the Russell disagrees with the other three, we always give that a little bit of credence. Remember, the Russell represents 2,000 small cap companies. That's why we refer to it as the man in the street. Let's jump to the news. More U.S. regional banks are taking a step that was unthinkable more than a year ago in the aftermath of the Silicon Valley Bank failure, selling underwater bonds at a loss. When Silicon Valley Bank did it, it spurred a panic among investors and depositors. The difference this time around is that regional banks aren't selling lower yielding securities to pay depositors. Instead, they are preparing for interest rate cuts from the Federal Reserve. Some cash from these sales is being used to buy new bonds that lenders hope will perform well as rates come down in the coming months or years. The Fed is expected to start cutting rates as early as September. If they've got extra cash, bank treasurers who think we're at the top of the cycle may decide to go ahead and lock in long duration bonds so that once we're in a lower rate environment, they still have a decent yield. I got to tell you, friends, this is pretty dangerous. I wish them well. The stock market rally is in its most fragile state in months ahead of Wall Street's busiest week of the summer. The S&P 500 and NASDAQ Composite recently had their worst single-day drops since 2022, as the indexes struggle to recover losses during a Friday rally. All three major averages closed the final full week of July lower. The S&P 500 was down more than 1%, while the NASDAQ fell over 2.3%. Meanwhile, the Dow rose about 0.6%. In the week ahead, a Federal Reserve meeting, the July jobs report, and earnings from big tech, Apple, Amazon, Microsoft, and Meta, will drive the direction of markets to kick off August. Updates on job openings, activity in the services and manufacturing sectors, and consumer confidence are also on the calendar this week. A busy week of corporate earnings await, with 171 members of the S&P 500 expected to report their quarterly results. AMD, ARM, Boeing, McDonald's, and Starbucks will be among the companies highlighting the schedule. And I think one of my news articles that I have for you today, McDonald's reported this morning, and it was a big miss. The Fed will announce its latest monetary policy decision on Wednesday. Markets largely expect the central bank to hold rates steady at the July meeting. Recent updates in the economy have investors eyeing when the Fed's first cut will come. In June, the core personal consumption expenditure, or PCE, which strips out the cost of food and energy because nobody uses that, and is closely watched by the Fed, rose 2.6% over the prior year. its lowest annual increase in more than 3 years. But remember, that doesn't cover a carton of eggs or a tank of gas. Separate data for the month showed a significant decrease in another inflation metric, the Consumer Price Index. Meanwhile, the labor market has shown signs of cooling. The ratio of job openings to unemployed workers is back at pre-pandemic levels, and last month, the unemployment rate hit its highest level since November 2021. This has prompted markets to price in the Fed's first cut in September, and investors will be keenly listening to Jerome Powell's press conference on Wednesday for any kind of confirmation. The overall tone from the meeting, including from Powell's press conference, should signal that a rate cut in September is a reasonable baseline without actually committing to this action, according to an economist over at Deutsche Bank. Keep in mind, Friday will bring a fresh look at monthly job additions as economists continue to debate whether recent cooling in the labor market represents normalization or more significant deterioration. We've been hearing from the current administration about all these jobs that were created. And so many people actually believe that. Would we know that, in fact, those jobs that were created were simply people who lost their jobs during the pandemic getting them back? You don't have to be an economist or a rocket scientist to figure that out. Most Federal Reserve watchers don't expect the central bank to ease monetary policy this week, but what they do expect is that policymakers will set the stage for an interest rate cut at their next meeting in September. Fed officials have said they're getting closer to having confidence inflation is sustainably dropping to their 2% goal. Tell you what, all these regional banks that are betting on that rate cut, they better hope it comes through. Yep, McDonald's misses. McDonald's customers are tightening their belts again in Q2 as they grapple with paying up for their Big Mac. This morning, the company reported Q2 earnings that missed Wall Street estimates across revenue, earnings, and same-store sales, proving not even America's most dominant fast food player is immune to the challenging macro conditions. Let's face it, if you've got a family of 4, the husband, the wife, 2 kids, a trip to McDonald's is going to set you back about $50 these days. A lot of families, obviously, can't afford that. Crude oil. Brent specifically. Brent crude slumped below $80 a barrel for the first time since June 10th, driven by algorithmic trading and signs of poor demand from China, the world's top oil importer. Commodity trading advisors have been dumping their bullish positions after futures dipped below key support levels. China recorded its slowest economic growth in 5 quarters in the 3 months through June, and the International Energy Agency has cited the slowdown as a major factor in weaker global oil consumption growth. Still, crude prices remain higher year to date, helped by OPEC Plus supply cutbacks, and here we go again, expectations for lower U.S. interest rates. perhaps as soon as September. Political risks remain front and center as investors weigh the implications of U.S. President Joe Biden suddenly dropping out of the race and not giving us a reason why. And our last bit of news, the Fed's going to overhaul themselves. Now, I know that 99.99% of you already know this, but the Federal Reserve is not a part of the federal government. It is a privately owned corporation. If you've never read The Train to Jekyll Island, copyright on it is expired. You can get a free PDF on the internet. I'm sorry, The Creature from Jekyll Island. That's the proper name, The Creature from Jekyll Island. This is how the federal... Now, Thomas Jefferson, back in the day, said if you ever want to destroy America, create a central bank. And this group of very wealthy men who took this train ride to Jekyll Island under the guise of a fishing trip, they cooked up this scheme and they sold it to Congress. The Treasury originally printed our money. Makes sense. But Congress decided to give the job to the Federal Reserve, this group of very wealthy individuals. They get to print the money and then loan it to America at the prevailing interest rate. This is why America's in trillions of dollars of debt. Now, if you weren't aware of that fact, you don't have to Google too far. The Federal Reserve is as much a part of the federal government as FedEx. On Friday, Democratic Senator Mark Warner of Virginia introduced legislation to overhaul the Fed's discount window, a long-running tool that provides fast, collateralized loans to deposit-taking banks. The Fed is already working to make sure banks are ready and willing to use the discount window, either in times of stress or if they simply face an unexpected liquidity shortfall. Banks have long shunned it, fearing that using it will send a signal of distress to their peers. That long-standing stigma stood out in March 2023 when several banks ran into trouble and spurred fears about the overall state of the banking system. While discount window usage briefly surged, the Fed was concerned enough to launch a temporary lending facility with very generous terms that proved popular. Now, those very generous terms come from the Fed. They don't actually print the money anymore. They just move a decimal point on the computer. So we'll see how far this goes. Logic 247. That's our 24/7 around-the-clock Emini alert service. Last week, we had, I'll show you in a minute, but we're now in week 313. And this recap is valid through this morning at 7:30 a.m. Valerie had a meeting, so there won't be another update until this afternoon. Since the markets opened last night at 6 p.m. Eastern, up until 7:30 a.m. this morning, 15 alerts had been issued. We were still waiting on 7. We had 8 actionable alerts, of which 2 or 25% would have been stopped out based on market structure. And a very simple process that we teach only our passport holders in their one-on-one mentoring sessions. Over the last 313 weeks, we've issued over 17,400 individual handcrafted alerts, and what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure, and that very simple process we teach only our passport holders in their one-on-one mentoring sessions. Now, the purpose of the logic alerts, it's not just the E-minis, it's crude, oil, gold, euro, silver, bonds. It's designed to teach new traders how to read a chart. Of course, some people make the mistake of just trying to trade the alerts because they figure, well, then I won't have to learn how to trade. Huge mistake. If your goal is to trade for a living, that will never happen as long as you're waiting for a man or a machine to tell you when to get in and when to get out. You must learn how to read the chart. And that is the purpose of the logic alerts. They come out around the clock. They can come out at 2 a.m. or 2 p.m. as opportunity presents itself. There's an entry price, an initial target designed to help you get your goal for the day, and additional targets, and then of course the final trade to target. The purpose of the logic alerts is to teach you to figure out how to do that yourself by simply reading the chart the way you would read a newspaper or a good mystery novel. Well, let me show you where did we end up last week? What was the final recap that Valerie sent out last week? I'm gonna have to scroll and scroll. Here we go. Okay. So last week, here we go. There we go. Last week, we had a total of 104 alerts issued. 15 never triggered. At the close of the week, we were still waiting on 17. 72 actionable alerts, of which 15% would have been stopped out. You know, I don't think that is the final. I thought it was. I guess it was. Yeah. Because we're in week 313 now, so week 312, 104 alerts, 30 never triggered, 74 actionable, 11 stopped out, so 15%. So last week we were well below the average of the last 312 weeks, which is 20% or less. And today we find ourselves slightly above it. But there's a lot of alerts that went out today, and there were still quite a few yet to be recapped. And again, Valerie will take care of that this afternoon. Now, once you learn how to read the chart, you might say, well, I already know how to read a chart. Okay. How's that been working for you? We're going to teach you how to read the chart the way we read the chart. Okay? And that might be different than the way you read it. Doesn't make your way wrong, just means we're going to teach you how we see it. Okay? Once you've mastered the logic alerts, once you're able to look at a chart and instinctively know what the next high probability move is, and you're able to create the alerts on a 30-minute chart, just like I do, there's a reason Behind every entry, every target, are not just random numbers that some machine spits out. No, it's from reading the chart. Your next step is the CTAs, the Concierge Trade Alerts. Now, they're posted shortly after the Globex open each evening. Last night, they came out at 6:05 p.m. Markets opened for business at 6 p.m. That was the beginning of the Monday session. 5 minutes after the open, all of our members and trial members had every one of these targets. Now, the first thing you do when this report is published is make note. First, pull up the 30-minute charts of the markets you actually trade. And make note on that 30-minute chart where price is at this time. Draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to keep you on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. BBC is the green line you see on all of my charts. It stands for bull-bear cross. Price crosses above the green line, we're bullish and anticipate higher prices. If price crosses below the green line, we're bearish and anticipate lower prices. Now, for the purpose of the alerts, it's always a 30-minute chart, but you can put it on a daily chart, a weekly chart, a monthly chart, a 5-minute chart, a tech chart, a range chart. It works the same wherever you put it. And this is where you find out if you've actually learned how to read the chart. And by now, you should be learning how price behaves at a weekly trading zone. That is very important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to reach the weekly zone above. Price is below the 30-minute BBC, it's trying to reach the zone below. Published the zones since December 14th of 2009. Almost 15 years. This December will make 15 years. They come out Monday morning at 6:15 a.m. Eastern. And once they're published, carved in stone for the entire week. They do not change in any way whatsoever. This week we have 2 sets of zones for gold because nobody gave me the heads up that we were going to roll tomorrow until today. So the initial set of zones that went out for gold were for the August or Q contract, but I've now also included the December contract or the Z contract. So you've got 2 sets of zones for gold this week. Now, beyond that, resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, as we go through all the markets, keep in mind that the zones you see today are last week's zones. Because as I said, the zones don't come out until Monday morning at 6:15 a.m. Eastern. So all of the alerts that went out last night were based on last week's zones. But every alert that went out today is based on this week's zones. So tomorrow on this broadcast, you'll see this week's zones. Today you're going to see last week's zones. Now, this is the daily chart of the ES. You may not trade the ES, you may not trade futures, you may trade stocks, crypto, Forex, ETF. Let me share something with you. Institutional traders, because of their account size and the size they trade in, look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So if you will make this part of your daily routine, before you start trading, go to the daily chart of whatever you're about to trade and peek over the shoulder of the deep pockets and see what they're doing. See where major resistance is. See where major support is. You see, we were able to identify support and resistance. It's not as easy to see that on a 30-minute chart, but bigger picture, you see when price gets above that green line, we expect higher prices. Lag, retracement, lag, retracement, lag, retracement. Now, as you can see, even when we were below, the pullback holds more often than it doesn't. But eventually, it will trade through, like it did on May 3rd, and like it did on July 19th. So we got a leg and a retracement. See, no matter which way the market's trending, leg, retracement, leg, retracement, leg, retracement, leg. Now, because we've gotten below the BBC, we're drawing legs in the opposite direction. Leg, retracement. See how that 38% fib extension served as good resistance? Leg. Now right here we found support at the 24% retracement. Then we continued to drop and found support at the 38% fib retracement. So we got a leg, a retracement, a leg. Now, if price were to get above red and falling, then we would expect resistance at the daily BBC. We won't worry about that until it happens. Okay? Just tune in every day and we'll keep you posted on where we are in the bigger picture. And as long as you know where we are in the bigger picture, it makes trading on your smaller time frames a lot simpler. As I said, all alerts, both the logic and concierge trade alerts, are based on the 30-minute chart. The vertical line separates today, Monday, which began last night at 6 p.m. Eastern. Here's Friday, here's Thursday. Now, these are last week's zones. They were published last Monday morning at 6:15 a.m. Eastern. Because all the alerts that went out last night were based on last week's zones because the new zones didn't come out till this morning. Every alert published today is based on this week's zones. Okay? So we opened right at the BBC. We ran up to the zone. We got above red and falling. We hit the long target. Okay? Plenty of room to get your goal for the day. 55.08 up to 55.13. It's 5 points. You only need 2 points to get your goal for the day. We drew this window in on Friday, and it filled last night. However, it wasn't able to take out the zone overhead. So we get a retracement back to the BBC. We find support at the zone published a week ago. Support will always send the market to resistance. Resistance will always send the market to support. Remember, the pullback to the BBC holds more often than it doesn't. But eventually, it will trade through. Okay? Found support here. Now we've gotten back above the BBC. So we've got potential resistance here, here, and at this swing high here. Now, if price were to drop back below the BBC, this would be a beautiful opportunity right here. From 55.03 down to 54.96. That's 7 points. Remember, you only need 2 points to get your goal for the day. On the Dow, Here's where we opened last night. Got above red and falling. We're already well above the BBC. We opened right at a zone. And we ran right up to the CTA long target. Pull back to the BBC, reach down, found support at the zone, pull back hell because those candles are still touching the BBC. So we go back up to the long target, resistance. Resistance will always send the market looking for support. And here it is a week after these zones were published, and they're still doing their job. Support, resistance. Now, you want to let price. See the step line and red and falling are directly below price. See, on the way down, they were your friend, but now they're an obstacle to a short trade. You need to let price get below step line and red and falling because they're both potential support. And right there, more than enough to get your goal for the day. 47.20 down to 46.80. That's 40 points. You only need, it's over 40 points. You only need 20 points to get your goal for the day. On the Russell, here's where we opened last night, 5 minutes into the life of this candle. Okay, that's when the CTAs came out. And in the first 30-minute candle, we nailed it. We then retraced back to this zone. Only 3 things happen at a weekly trading zone. 70% of the times consolidation, 20% of the times rejection, 10% of the times the slice. See, this candle sliced through the 30-minute zone, through the weekly trading zone like it wasn't even there on the 30-minute chart. When that happens, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. And price could go no higher. That's resistance. And if you look over here, you'll find out why. We pull back to the BBC and the weekly trading zone. We put in a slightly higher high. And again, over here is your reason. And down we go. We hit the short target, on support, or basically just ran out of time right there at the target, and then continued. We've had a leg and a retracement, a leg and a small retracement. Now we have a leg that's trying to get down to that area. You see, price stopped right here for a very good reason. On Friday, we had a bullish cross right there. That's when the blue line gets above the green line. That's a bullish cross. And if you follow the horizontal line on my cursor, you'll see that's the low of today. Today we had a bearish cross. So should price get back up into this area, we expect that to be good resistance at least the first time up. If price can take out this low, then we've got support down here. Okay. Again, it's all about learning to read the chart. In Q, this was the open last night. We ran right up to the target. Remember, each of these are 30-minute candles. We consolidated at the target for hours. Pulled back to the BBC. It held. We went on to put on a higher high, just shy of that high. Then we dropped to the short target. Support always sends the market looking for resistance. So is it going to find it here, or here, or here? We'll pick up where we left off when I come back. Michael is here. He's going to give us a recap of everything that happened in the live training room this morning. Then we'll go live on the TradingView platform for 30 minutes and do some trading. And then I'll be back, finish the recap, and wrap it up with our good word for the day.
All right. Sorry about that. I did not realize what time it was.
Oh, no
It's
problem.
in my garage.
Nope,
All right.
everything looks good.
Good. Here we go then. Good afternoon, everyone. Today is Monday, the 29th day of July, 2024. The 29th. What does that make? Yeah, okay. The 29th day of July, 2024. So, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. Now, when you click on that purple button, it is going to bring you to, well, let's see where it brings you. It is going to bring you to this page right here. It's probably the same as that one. This page right here, where all that we ask for is your name, down here, name, email, phone number. There are 5 multiple choice questions. And down here, if you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. If you do that, we'll be able to enable the indicators for you so you can start your free trial with your indicators running on your desktop. That is the best way to start it. All right. All right. Now I'll get into the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 29th day of July, as I said. Today we made 10 ticks on the Russell, 67 ticks on the YM, and we lost 6 ticks on the ES. That put us at plus 310 on the morning session. I did not try to trade the NQ this morning. Okay, that put us at 310 on the morning session. So this morning it took 7 minutes and 2 trades to get to the goal for the day. At that point, we're up $1,900 a contract, and we took a total of 15 trades this morning. So on the month now, we're at $9,985 over 19 business days, averaging $525 per contract per 2-hour business day. Now the number to beat is this one right here, 10,745. So that's just, that could happen. We have tomorrow and Wednesday to get above that number. That's the number to beat. We'll see how it works out. If I start trading the NQ again, it'll probably, I can do that on the NQ alone, just about. But anyway, yeah, on the month we're at $9,985 over 19 business days, averaging $525 per contract per morning session. On the year, we finally hit 57,070. So right now we are almost January, February, March, April, May, June, July. Almost 7 full months into the year, we're at 57,000. I don't know. We'll see how it goes. We did have some slow months leading into this, so this month hopefully it's going to pick up as earnings season begins and all that. Hopefully it's going to pick up and we'll start getting a whole bunch of nice trades. Anyway, $410 per day is what we're averaging with 1 contract in the morning on the year. If you were to follow the 24/20 blueprint and begin with 1 contract this year and add 1 contract per month. So what that means is you earn $2,000 per contract per month. So this month, if you had seven contracts, you had to earn $14,000, quitting when you got the goal for the day. All right, I have 19 contracts on, so I had to hit $38,000, quitting when I got the goal for the day. And so far I'm at 48. You have to do that every month, right? And then you keep adding a contract, the 24/20 blueprint. You keep adding until you get to 20 contracts, which for me will be Thursday. If you were to do that this year and you started with 1 contract, you would have been averaging $1,630 an hour at this point. You only would have had to work 46.18 hours. If you started last year with me and you did the same thing for 19 months instead of just 7, same 46.18 hours so far this year, and you would have averaged $6,797 per hour. $67.97 per hour. All right. That's it. Let's get into the trades now. We did not trade the NQ. I'm not even going to go through the NQ really. Maybe I will. I don't know. We'll see. But we started out with the YM. The YM's where we made most of the money. Let me just do this. Okay, we'll scroll back this way. Let me put it over here. All right. So the YM started out right here. Our first trade on the YM was right here, and I actually screwed up the first trade. I put the trade on and I got 30 ticks in profit, but I had trailed my stop and got the 30 ticks in profit, and it came back and it hit the trailing stop and it made me long. So it took me out at 30, came back and made me long and stopped me out with 10 ticks stop out. So I got 30 ticks on that and minus 10 on that. I just counted it as 20 overall because it was all like one trade. And that's where we got the goal for the day. The next trade we took was right in here, and we picked up 10 ticks on that one. I think, right? Yeah, 10 ticks on that one. Then the next trade was right here. We picked up 11 on that to get us to 41. Then the next trade was over here, another 10 to get us to 51. So what that means is, never mind. We got to 51. I added 10 ticks on, and I got to 51. The next trade we took was right here. I had another 10 to get me to 61, and then one more trade here. I added 6 to get me to 67. And I believe that is it. I'll get into the lesson plan. And I believe that was it. Yeah, that was it. All right, so during the break, it was a blue arrow here that would have stopped out, a blue arrow here that would have given profit, blue arrow here that would have been a combo blue arrow that would have given some profit, and that was it. Market's been kind of flat here during the break. It looks like a lot of no trade zone going on. All right, now we'll do the Russell. On the Russell, let's minimize this, slide this. Let's do it this way. All right, so on the Russell now. First trade, we started out with a stop out, I thought, on the Russell. We did. Okay, let's get to that. I started with a break even. Then we had a stop out. Then we had another break even, and then somewhere in there we missed a trade. We had one nice trade in here where we picked up 20 ticks. I don't know where I put it, but there was a nice trade in there. We had the stop out, and then we had a 20 tick trade that got us to plus 10, and then we had another stop out that put us back down to 0. And then we had a couple of break-even trades, you can see. We went into the lesson plan. After the lesson plan, we had one more trade. One more trade right here. We picked up 10 ticks on that. And using the diamond principle, if you guys don't know what that is, the diamond principle, we're looking for price to get up to this level right here. I got just about up there, almost to the tick. It got up there to finish the diamond principle. Okay, if you don't know what that is, get into the room in the morning. Then during the break, we had a blue arrow there, a blue arrow there. Both of those were all right. Blue arrow here, that was good. This one was bad. And that brings us to this green arrow that we just got. And that was it with the Russell. Now the ES. Let's get on the ES here. We didn't do too much with it. Started out here with a stop out, minus 10 ticks. And then over here, we got plus 4 on this to get us to minus 6. That was all that we did with the ES. There were some more trades in here. Those blue arrows would have been a combo and given some profit. Either one of these would have given a little bit of profit. That gave some nice profit if you got it. That would have stopped you out, but that was during the break. Complete no trade zone here. Look at that. We're in a complete no trade zone right now with that. That's going to make some pretty dry trading here. Now the NQ we did not trade at all. Okay, we did not trade it at all. And rather than look at the NQ on a 15 range, why don't we look at it on a larger time frame? Okay, because right now 15 range is pretty fast. Let's get on a 31 range. Okay. So even on a 31, it had a ton of volatility and a ton of movement. It's like the NQ is trading on a wrong month or something like that. There are so many players in it with small orders. They kind of have to be. All right, so on the 31 tick, which means your stop with a 31 tick would be about 45 ticks. All right, and you probably do 40 ticks, I guess. it's got to be a multiple of 4, right? So we'll say 40 ticks will be your stop. And you'd bump to break even after probably 12 ticks, 12 to 16 ticks. Yeah, that's how it would work out. Now, from top to bottom, what you would be looking at when a bar is being built, the buy stop limit would be 8 points from the top or bottom of the bar. Okay, 8 points from the top or bottom of the bar. So using the 31 tick, you had a great trade there, a great trade there, a great trade there. One that wasn't so great there, another great trade there. Good enough trade there. Good enough trade there. When I say good enough, I mean to get you stop to break even. Same thing there. And there as well. And there. This is during the break now. This is all during the break. Okay, I think I'm going to get into complete no trades on there. Yeah, a bunch of flat stuff there. So there was a ton of opportunity using the 31 tick. Now, what I was saying earlier, if you were looking for a down close or an up close, let's say we're looking for an up close on this bar, it's got a low here of 318. It'd be 8 points above that. So you'd be looking at 326, what your buy stop limit would be. Okay, or like this bar right now that just began. We're in chop, so there's not going to be any trade here. But if we were looking for a down close on this bar, it'd be 8 points below 17 and a quarter. It'd be 9 and a quarter is what you'd be looking to sell. All right, the 31 range. You guys all get that? Does that all make perfect sense to you? All right. And that's pretty much it. So for the YouTube crowd, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that purple button, and that is going to get you to this registration page. On this page, all that we ask for is your first name, your last name, your email, your phone number, and there are 5 multiple choice questions. Down here, if you have a Ninja Trader Machine ID, give it to us. If you have TradingView login ID, give that to us. Hit the register button. Once you hit that button, you will be sent to everything you need to get into the room in the morning. All right, and to activate your indicators. All right, so one of the things that I looked at last week, Chris, for some reason, I feel like you sent me something in Telegram and asked me for that file, and I can't find where I sent it to you. I did send it to you, didn't I? You did ask me for it, didn't you? In Telegram, that's what I thought. Yeah, and I did send it to you, right? The button file. I had this weird thing, because I had a video that I was going to send you to go with it. Here, let me see. I'm pretty sure I have that video. I made the video Friday night. It's this one right here, 7:26. Yeah, I made it for Balraj, who was a new partner Friday night, and I'll send it to you. It's a really quick video, but it is on its way. Okay, there it is. I should rename that video. I know I say his name in it, but if I rename it, then at least I'll know where it is. Button video. There. All right. So we have no trade zones everywhere right now. We don't have any trades going on. So what can we do to entertain you? Well, you see, in the future, in a future world not too far away, what I hope to see for all passport people is the ability to go long whenever you come out of the oversold, and to go short whenever you come out of the overbought. See this right here? This is on a 31 range, So ideally, every bar that comes out of the overbought or oversold would be a pivot bar. So your stop would have to be like 33. And your target would be at least 33. But look at the way this is working. Came out, bang. Came out, bang. Came out, bang, 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 bang. That's the only one that pulled back at all. But before it pulled back, it went 331 entry. It ran up to 336. So it went 5 points or 20 ticks before it pulled back at all. Then going in the opposite direction right here. Bang, bang. Is this something you guys think you can do? Even on a really crappy, choppy day like this, it's nailing it trade after trade. It just had one right here, a long trade right here. If you would have gotten long right here on the up close of that bar at 14, it ran all the way up here to 22 from 14. 24 tick gain. That's the goal for the day. Almost every one of those would be enough to get the goal for the day on a really crappy, choppy market like this. Coming your way to a neighborhood near you very soon. See, you're below the BBC. Look for it to come down. It's the first stop out right there. First stop out right there. You got it back on the second trade. Next trade, next trade, next trade. Second stop out right there. Pretty easy stuff, right? It's on a larger time frame, so you could do this a couple different ways. Because it's on a larger time frame, you might not want to risk, 32, 33 ticks, $5 a tick. So what you can do is do a micro. You do a couple of micros. You do 5 micros. And the commission will be about the same. If you do 5 micros, instead of it being $5 a tick, it would be $2.50 a tick. So it cuts your risk in half. I get the same result. If you look at this on the MQ. Okay, same result. Looking at the same thing. This is the long that I had a few minutes ago. The other one was right here. And the other one went from 14 up to 22. This one went from 14 up to 22. Same thing. 14 up to 22, and it's still going. But but if you were to just look to get the goal out of each trade, out of one trade, then you can see there's about 20 of them right here where you could have gotten the goal. Coming to a desktop near you before you know it. If you're above the BBC, you're looking to go long. If you're below the BBC, you're looking to go short. Rico. See right here if it pops out. And this is an 31, so it'd be 8 points above, right? Okay, so it didn't pop out on that one. But you know the up close is going to make it pop out. So it's going to be an up close. So it'd be 8 points above whatever the bottom of this bar is. The bottom right here is 1825, so it would be 625. Where's my NQ? There it is. 625. Here it is. Okay, now I don't have a 30 tick stop ready for this, but just make sure I have it in the right place. 1850. Okay, so this should be one more. 2650. 8 points above the bottom of the bar. If we get the up close, it's going to pop out. Okay, we got the down close instead. Now this is getting a little uglier because it's turning. You see how far down it's going? It'd still probably work out on the up close. It's going to pop out and it'll still probably work out. But now everything just changed to bearish right here. So I'm going to let it go up here and get to bullish. Let this get into the overbought. And then we'll look for the opportunity on the downside. Okay. Should only take a couple of bars to get it up into the overbought. Yes, you have had something for 4 days. All right, so that didn't get it into the overbought yet. Maybe this next up close will do it. Almost there. There it is. We're in the overbought. So now 8 points from the top of the bar. Right? It's at 1825, so we'd be down at 1025 is what you're looking at. It's down right now. Oh no, it's a little higher. Oh, it actually gave the down close already. Holy crap. Hang on. Okay. I just took it. Here it is. All right, so I'm going to throw my stop at break even now. And so what I'd be looking for, this is a 30 tick target. Yeah, so that's good enough. We'll take that. I'm going to lock in something here. But I wasn't ready for it. But do you see how easy that was? And I wasn't expecting to get the purple arrow on it, but I wasn't really looking for the purple arrow. You see how easy that was? I was looking at the complete wrong DOM on that. All right, so now when it gets up into the overbought, we're in complete chop right here. Normally we wouldn't trade this at all. We wouldn't even be considering it. Okay. You see how I almost had 30 ticks on that trade? It almost gave me 30 ticks. It gave me like 28 from my entry point. Now we're not in the overbought, so I'm not going to consider a trade here yet. There, now we're in the overbought. Now, if it does not close up on this bar, then I would consider taking the short, right? VC is still below. So 8 points from the top. 26 minus 8 is going to put us down at 18. I'll get it in the right place this time. There, I got it in the right place this time. Here, I'll bring it over and show you. There it is. Okay. 26 is the top, I think. 26 is the top. So a down close on this is going to be right here at 1825. So it'll trigger me in at 18. Now my stop is set to 20 ticks, so I'll have to change my stop. I guess I can change it right now. Maybe 23, 24, 25, 50. There, now the stop is at 30 ticks. I guess it should be more than 30. 34 ticks. There we go. So I have to change my target once it fills, as long as it does fill. 26. There it is. Triggered me in on the down close. And so now my stop is in the right place. So now you anticipate that it's going to give me at least 30 ticks. I got to find my DOM. Hang on. Here it is. These are the first trades that I've taken on the NQ today. So now I'm going to throw my stop at break even. All right. I could have just taken a whole bunch on that, but I want to throw this target out a little bit more. That's 34, 38. Okay, so now I have no risk on this trade. And I anticipate that it's going to go much further down. And there it is, 38 ticks. Bang, just like that. How easy is that? So, yes, coming your way soon. You have to be a passport guy, though. You have to be a passport. So if you're on the fence, get off the fence.
Matthew, I saw your hand was raised. If you have a question, just type it into the question box.
Matt texted me a little while ago. You did ask me what days I'm available. I could be available today. When are you available? I already have some meetings set up for this afternoon, and there are some things that I got to do. But when are you available, Matt? Okay, so we're below the BBC, so we're not going to do anything. We're just going to wait. And these are the first trades I've taken on the NQ so far this morning, right here. But pretty easy stuff. What you think? We got to finish out the 24/20 blueprint with what we've been doing for the past 10 years, 12 years, 15 years, whatever it is, since I started the spreadsheet anyway. So now it's almost 12 years. See, now you could have stayed in that if you wanted to, down to the swing low. The diamond principle that I talk about in the morning session, a lot of times I talk about it in here before. Same thing applies with this. I know it's a larger time frame, but the same thing applies. You're looking at the same stuff. Okay, the same stuff with the diamond principle. I don't know what color my pen is here. Looks like it's brown. I'll make it black. Okay, where this and this space right here is what you anticipate is going to get repeated right here to finish that. So that would put price right about there when it finally breaks out of all this junk. Okay.
There's a zone at 19,298.
Yep, it's right there. And it's already wicked through that once and come back above it. So I think that zone is held several times today. Several times.
And then the next one down would be 19,181.
And where's the midpoint? Hit erase on this. The midpoint is, hang on, I got it right here, 240. 239, 240, right down there. Perfect. All right, so we're almost in the overbought again. Almost in the overbought again. And again, when you do this, like I had 35 tick stop on that. So that's $175 stop. If you don't want to have $175 stop, you could break that down to whatever half of that is. 82.50 by trading 2 micros instead. Or 5 micros, I'm sorry, trading 5 micros. You could break that down to less than $100. And still take the same great signals. Right? With the NQ being as choppy as it's been, I don't want to trade it. Right? Now this has got a high of 310, so you're looking at 302 right now. And it just filled me. Here it is. It just filled me at 302. Okay. Came down out of the overbought. Now my stop is not in the right place.
Now you know you're charting with one and executing on the other, right? You've got
Yeah,
the
it doesn't
micro
have
on
to
the
be
chart. Okay. Just
Yeah,
want to
they're
make sure
close
you're
enough.
aware. Okay.
Yeah, they're close enough. I didn't really mean to do that. You're right. I didn't mean to do that, but they're close enough. All right, I'm going to drag my other one down to break even. All right. And so this is a 20. No, that's a 30 tick target down there, but I could have just locked in some good profit on that and just took me out to break even. But I could have just locked in some good profit on it. If I had set my bracket up properly to begin with, then we just locked in some, probably 10, 15 ticks on that, or 12, 16 ticks on that. I would have to go in increments of 4 on the NQ. But did you see how easy it was? From right here, we just about had all 30 ticks in that. I don't know how I didn't have 30 ticks in there. 2 down to 92. It was, we had 27 ticks out of 30. All right, we're not coming out of the overbought. So it's a little risky if you want to take it, but there's no reason to actually do that. So to finish the diamond, we just finished the diamond. The thing that I just drew for you a minute ago, I'll draw it again. Just finished it, the diamond principle. This space right here, repeated right here. Extend that out, and where are we? Right there. That's perfect. I love it when the market agrees, and that was coming out of all this nasty chop. You can't get much better than that. You can't really ask for much more. That was perfect right there. The way that came together. And if you would have took the gamble on this, it would have just worked out for you. But this number up here, I think 85 is what I have that set at. 85 and 15. I think that's what I have those set at. That's just from lots of testing that I came up with that number. You can come up with your own numbers if you want to, but in this horribly choppy period right here, so far we've had one trade right there that gave pretty good profit. I think I got a break even on this trade right here that I got 38 ticks on. The next trade that I could have had 20 something ticks on that I ended up with a break even on. In all this choppiness, we're able to put those 3 trades on in this half an hour period. It wasn't even a whole half an hour, only 20 minutes. So 5 times the goal for the day in this period was available to us. All right, it's 1:28. I'm gonna wrap it up here soon. And Matthew. I was thinking of something. You and a whole bunch of you guys down there. You guys all still in Texas? Matt? All right. Well, guys, it's just
He
about time
just
for me to wrap it up.
answered me
Send it
in a
back.
private message. Sorry, I'm running around the shop, and yes, we are. That's from Matthew.
Oh, okay. All right. I figured they probably got a lot of work down there right now. They go where the hail damage is.
We had hail in the middle of the night the other night, and it didn't even rain.
That's crazy.
Yeah.
You guys get some weird weather out there.
We've had hardly any this monsoon season. We've had like practically no rain at all. Well, actually, no. We don't need the flooding, but we do need the rain.
Yeah, we had like a month with almost no rain, and just enough to kill all the grass and make everything look horrible.
That's very unusual for for your part of the country.
Yeah. Yeah, we usually get a little bit of rain, just enough to keep the grass green and stuff, but we didn't have any. And then all of a sudden we had we're on our third week right now with hardly any sun. I got to go out.
In Georgia, where I grew up, I mean, it would rain at least 2-3 times a week. I mean, it was just
One good thunderstorm.
Yeah.
That's what we're supposed to have today. That's why when I'm done in here, like right now, when I'm done in here, I gotta get out and put the cover on the boat, stuff like that. Rico, you can watch it on YouTube. It all got recorded on YouTube, isn't it? It still is in Georgia, Rico's, because he's in Atlanta. Everything that I just did with all this stuff.
Yes,
it's all recorded on YouTube.
The afternoon broadcast is recorded from start to finish every trading day. Currently on YouTube, there's over 2,600 daily episodes. So thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. But if you just want to see today's broadcast, just 30 minutes after we finish, YouTube will have it rendered, and it will be the first video you see when you go to youtube.com/CFRN.
And here was just another one that went 16 ticks, enough to get the stop to break even, maybe take a little profit. And here comes another one, 263 minus 8 would be 55. You'd be looking at on that. And the down close right here, 8 points from the top. 264 would be 56 now, something like that. Anyway, let me show you guys how to.
You might want to address Rico's last question.
Oh, I sure will. And are the ranges always that higher? Can you make them smaller? You can make them whatever you want. I just did it in this range right now because all the chop that we have going on right now, the bigger range kind of gets rid of all that noise, right? A bigger range will get rid of all that noise. And that's why I was saying, the question was, okay, thanks. So you always have to make the ranges that high. Can you make them smaller? You can make them smaller.
When in doubt,
I made it big
zoom out.
Yep. That's why I made it bigger, to get rid of all the noise. I mean, even in here, we're in chop, but in chop here, one bar length in this kind of chop is enough to get your goal for the day. So, this trade right here that just triggered went from 65 down to 59. That's 12 ticks, right? That's 12. 65 down to 59. 6 times 4. It's 24 ticks. You can take pretty good profit on that. That's the goal for the day right there. 20 ticks is the goal for the day. But if you don't want to be as big of a range because the risk is too high, then what I was saying is you could do 5 micros, which works out about the same, probably commission-wise, pretty close to the same commission-wise. And it's half the dollar amount per tick. So it's $250 per tick is what you'd be doing. So instead of risking, $175 per contract, you'd be risking $82.50 per contract or something like that. $87.50, is that right? Something like that. Whatever that is. It'd be under $100 if you do the micros instead. And the micros are more liquid than the actual contract right now. This is the mini, and let me see if I got a micro up here. I brought it up the other day, and I don't know if I still have it up. MNQ, here it is. And this is the micro. So the micro is actually more liquid than the mini. So the trades that I just put on this one a few minutes ago with 1 contract, you could easily put on over here with 10 contracts. Well, I say easily. You could put on with 10 contracts and get the same result, but you could put on with half the contracts, cut your risk in half, and take the same exact trade. See what I mean? You could take the same exact trade on a micro based on this range bar and cut your risk in half by using half the micro size. You get it. This is the micro right here. I'm charting this on the micro right now.
It's the same market.
You can chart the micro.
They just slice up the pie differently.
Yeah. So this is the micro that I'm charting right here. And I didn't start out with the micro. The first trade that I took, or the first two trades that I took, had the NQ chart or on the NQ DOM. Then I flipped over to the micro chart, but I took the trades on the regular NQ DOM. But I could have taken them right here on the micro DOM too.
It's $20 a point on the E-mini, and on the micro, it's $2 a point.
Yep.
1/10.
So you could cut your risk in half by trading 5 times as many contracts on a micro instead of 10. You see that? All right. I've run over, guys. That is going to be it. Mike R., I'll send you the link. Matt, we'll have to get in touch and find out when you're available. And what do I have tomorrow? What do I have tomorrow? I see Wednesday. I see Monday. I don't know. You guys have to remind me. All right, but I'm going to wrap it up and send it back out to Fabulous Phoenix, Arizona. But let me show you this first. If you haven't taken a free trial, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for this trial. Click on the trial. Click on that. It's going to bring you to this registration page. Fill out this form. Once you fill out this form, you will be sent a link to get into the next session. Never mind. That is so. I just slipped right back into like 2015 talk there. Once you fill out this form, you'll be sent all the information you need and all the links to get into the session in the morning. All right. To set up your indicators, to get your indicators indicating, and to get started with everything that we do. All right. That's it. With that, I can pass it back out to Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. There, I got that part right. Okay, and there it is. Headed out to Fabulous Phoenix, Arizona.
Alrighty, recap of the morning session.
Today it took 7 minutes and 2 trades to get to $1,900.
Great start to the week.
Thank you.
This week is the busiest week of the summer. If you take a look at the news, we got more news, FOMC. That's what they're billing it. They're billing it as the busiest week of the summer. I went through it all in detail when I shared a news article with the audience earlier in the broadcast.
Good.
All right. Okay. All right, guys, we'll pick up where we left off with the NQ. Right now, we're still consolidating right at that long target. Those of you who arrived after the start of the broadcast, CTA alerts went out last night at 6:05 p.m. Eastern. It's 5 minutes after the market opened. So all of our members and trial members had each and every one of these targets 5 minutes after the open. Now we've already gone through the ES and discussed that, and the YM, and the Russell, NQ. Let's go to crude. So we opened on crude last night. We dropped to last week's zone. Remember, these are last week's zones because these alerts went out last night, and the new zones don't come out till 6:15 a.m. this morning. So this zone was published a week ago, last Monday, but it's still doing its job, holding as a good support. Support will always send the market looking for resistance, which you can see this high right here. Here's your double top. So then we get below the BBC and we travel down to here, just above the lower Friday. Okay, buyers come in. Not unusual for buyers to come in just before we hit a previous low. They don't want to miss the move. Okay, so they push us back up, get above the BBC, but we fail to put in a higher high. We got a high, we got a lower high. Now that's a sign of weakness. And not surprisingly, it took us right back below the BBC. Took us below blue and climbing, which quickly turned to red and falling. And in one fell swoop, we made it all the way down to the target. This candle opened at 76.81 and dropped just shy of $1,000 per contract traded. Right there in that one candle. Once you've earned the right to trade 5 contracts, then that's a $5,000 candle. Once you earn the right to trade 10 contracts, that's a $10,000 candle. Okay. So we traded through the target. Low of the session, 75.35. All I got to do is go over here and find out why. Notice that the black step line, okay, when we're parallel, when we have the perfect stack, price, step line, red and falling, BBC. No reason to get. Now, number one, we teach you to just get your goal for the day. Have the discipline to put the mouse away. But I know a lot of you don't have the discipline to do that. But I'm telling you right now, if you're in this short trade, you should be considering taking your profits. Because the step line, see how it's angled? It's in the process of crossing red and falling. When the step line crosses red and falling, that's an indication the price is going to attempt to retrace to the BBC. Price always reverts to the mean. In our case, the mean is green. It's called the BBC, bull bear cross. Bearish below it, bullish above it. As you can see here, the pullback held, and it held, and it held, until it didn't hold, right? And we got this huge move. And then when we could go no higher, look left, see what happened. Red and falling took us below the BBC. Now this is back on Friday, okay? Friday's low, see how buyers came in right before we hit Thursday's low? This is Monday, this is Friday, this is Thursday. Now on tomorrow's broadcast, you'll see this week's zones. The ones that came out this morning at 6:15 a.m. Eastern. These came out last Monday at 6:15 a.m. Eastern. We got a low. We're now anticipating a retracement back to the BBC. And if the pullback holds, see how it held? And it held. And when it didn't hold here, when it pulled back up to it, it held. And it held. And it held until it didn't. Okay? But you always expect it to hold until proven otherwise. In other words, when price retraces to the BBC, you don't automatically place an order. You got to let that 30-minute candle finish and then see where the next candle opens. Okay. All right, that's crude. Let's go to gold. This is where the market opened last night, and we shot right up to the long target. Now, it was 5 minutes into the life of this candle that the alert came out. So even if we didn't get into here, which based on market structure would be a ideal spot, 2390 to the target, it's $1,000. It's over $1,000 in that contract because it went all the way up to, so it's a $1,200 candle. Okay. Retracement. Remember, this is how price works. Lag, retracement, lag, retracement, lag, retracement, lag, retracement, lag, retracement, lag, retracement, lag, and we put in a lower high. Sign of weakness. Back we go to the BBC, the pullback holds, but we got red and falling overhead. So that's pressure, and look at all those wicks sticking up. So we come down to the zone, last week's zone, find support. Catch a bounce, resistance, back to support, back to resistance, and all the way down to support at the weekly zone. Last week's zone. These alerts were published last night. Everything published today will embrace the new zones that came out this morning at 6:15 a.m. Eastern. So as you can see, the step line is crossing red and falling, and price is doing its best to get back to the BBC. Of course, we expect the pullback to hold until proven otherwise. So you got to exercise patience. Okay. In my days and years, I've come across so many talented traders who were so close, but that was where they struggled. Patience, the discipline. All right, silver. Now, tomorrow we're going to roll crude to the December contract. I mentioned this earlier in the broadcast as well. Nobody mentioned to me last night or over the weekend that we would be rolling to the December contract. I went out and looked at bar chart, and bar chart still showed August. So I published the zones for August. Checked with Bert this morning. He said, yeah, we probably should roll gold to December tomorrow. So, and one of our members also alerted me to it, and thank you for that. And so I redid the zones for the December contract. So now you've actually got two sets of zones for gold. You've got Q, the August contract, and Z, the December contract. And I don't know if Michael's trading gold in the room right now or not. So, but you may be. Okay. Many of you have advanced beyond coming into the live training room every day because you already know what's going on. So, okay. Look for a pull-up to the BBC. Consolidating here at the target. But as this crosses, we should get another push to here. And it'll become very important. Does it hold the way these held? The way these held? Does it trade through it? If it trades through it, keep in mind you've got a bearish cross right here. That's potential resistance. Then here. Then here. Your clear sailing doesn't come in until 2398 to 2400. Got potential resistance here and here. 2405 up to 2409. That would be a nice $400 per contract trade if price goes up there. See, I know that many websites and emails that you get, people try to convince you that they know what's going to happen next in the market. That's why you should buy their latest, coolest, whatever. I'm sorry that people lie to you, but it's just inherent in this industry. No one, not man or machine, knows what's going to happen next in the market. Now, well, if I don't know what's going to happen next, stop, think about it. That would defy the laws of science, physics, even God. When God created Adam, he did not give Adam the ability to change the past or to know the future. We're all descendants of Adam, are we not? Yeah. Now, rather than lie to you and tell you that we know what's going to happen next. And when you look at these targets and stuff, it looks like we do know what's going to happen next. No, we simply are able to read the chart, and we'll teach you as a passport holder to read the chart. And then you'll be able to establish these types of targets yourself. See, there's a huge difference between knowing what's going to happen next in the market and knowing what the next high probability move is. World of difference. Okay? We're honest with you. And sadly, that costs us business because of our honesty. I mean, if you're brand new to the world of trading, when you were brand new to the world of trading, how many times did you fall for the lies? Till you finally wound up on our doorstep with a bad case of battered trader syndrome. Broke, tore up from the floor up. And then when you spent your first week with us on your trial, it's like, my God, how could I not have found this place, 2 years ago or 50 grand ago? Yeah, well, I don't have the answer for everything. God has a plan for your life, and what matters is that you're here now. Now you're in a place where people are going to be honest with you. They're going to tell you the truth. They're going to teach you how to read the chart so that you can then be taught how to trade. Okie doke. Now don't let this fool you, because you've got support times 2 right here. Step line and red and falling. So price could come down, hit this double support, and then like a rocket ship make a run at the BBC. Or it could, you've got to embrace all possibilities. It could trade right through it. But I'm telling you, that's not the high probability move. And that's the key. You've got to learn to spot the high probability opportunities. Trying to teach as many of you as I can who are passport holders who have one-on-one mentoring sessions with me how to look at the chart, how to spot the windows of opportunity, how to map out your work before price even gets there. Heard it referred to as big toe fishing, where you drop a line, tie it on your big toe, lay back, take a nap, and you get a bite. You set up, reel it in. Yeah. No reason to get caught up in the noise when there are clearly and obviously windows of opportunity out there. Okay, what do we got left? Silver. Step lines crossed, red and falling, pulling up to the BBC. Now, this was the open last night. And it seems like, I think on every market, we hit the long target on the first candle. And you only need 2 pennies, okay? So let's say you waited to here to get in, okay? 28.15, we'll call it. That's 6 pennies to the target. It went further, of course. Okay. Now, 2 pennies is $100, so 6 pennies this is a $300 move if you didn't get in. 28.15. 28.15, 28.21 at 6 pennies. That's $300 per contract traded. I don't recommend silver for beginners. I don't recommend the NQ for beginners. So we basically got a triple top out of here today in the bottom. Ooh. But where we find support? At the zone. We spike the zone, yep. Then we pop right back up. And all these candles are touching last week's zone. All right, the euro, here we go. Okay, this one, as soon as I said it, yeah, of course. This one didn't go to the long target on the first candle. Dropped to the support that was given us Friday. Buyers came in, drove us up to the zone. We almost made it to the target. But you see, Thursday we had a high. Friday we had a lower high. And then last night we had a slightly higher high. That's a little confusing, okay? When in doubt, zoom out. Go look for a different market. I'm not crazy about trading the euro anyway. I mean, it functions like any other market, but anyway. So we get below the BBC. We drop to the short target. We continue dropping almost to the zone. It's 490, 495. Support sends us to resistance. We overshot that high by just a couple ticks. Then we come down through the zone. Support's way over here. Support's going to send us looking for resistance. See how the step line crossed? What did price do? Pull right up to the BBC and the zone. That's resistance times 2. But red and falling has curled up and turned into blue and climbing. That's potential support. So even if we do get a reaction to the downside off the BBC, if the pullback holds, as it does more often than not, you got to keep in mind blue and climbing is support. Now, I'm not saying that price can't drop through blue and climbing, but I'd be very careful, okay? So, I think that's it for today. The daily chart, we still have resistance at red and falling. Okay. Now, on the daily, it looks like the step line wants to cross red and falling, okay? So, pull back to the BBC. All that would do, I'm going to draw this, now I'm going to erase it, because I like to keep my chart clean. So if price pulls up, to the BBC and that trend line, right? Pull up, and then we got a leg of retracement, a leg. It retrace all the way to here. The only thing that would change the dynamic is if we closed above the BBC and then had another candle open and close also above the BBC. Then we'd be building legs in the other direction. And if there's ever a week that something like that could happen, if you were tuned in earlier, I went over all the different economic reports coming out this week, including the granddaddy of them all, the FOMC. So expect some extreme volatility this week. Okay? All right. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. If you become a passport holder, you'll not only have access to the live training room every day, but you'll also have access to unlimited one-on-one private mentoring. The strategy you learn, the indicators that you own as a passport holder, are fluid across all markets and all timeframes. As a passport holder, you get the Logic 247 alerts, concierge trade alerts, the weekly trading zones, and you're able to attend the members-only workshop on Thursday night. Not only are you able to attend, but you're given the golden key that opens the private channels in Telegram. Because every Thursday night we record the members-only workshop and we put it in a vault in Telegram. And if you've got the key, you can go in and watch previous workshops. Do you need to? It might not hurt to watch a few. Do you really need to? No. Just start showing up, asking lots of questions, and it'll all start to come together for you. Okay, when you're brand new, you don't really know what question to ask. But I can promise you this, you'll never get the right answer by asking the wrong question. Let's wrap it up with our good word for today. Friday, we talked about showing grace to those who are different than you. We all have people in our life, whether at work or wherever, our neighborhood, neighbors, people that are different from us culturally, perhaps spiritually, politically. But today, are you having a nighttime experience? Psalm 134, verse 1. Bless the Lord, all you who by night stand in the house of the Lord. God divided time into days and nights. So you will have daytime experiences and nighttime experiences. For example, you can have a nighttime experience in a divorce court, in bankruptcy proceedings, in an unemployment line, or at a graveside. And because you can't see clearly at night, it's easy to wonder if God is really there with you. Take heart. He is. With Pharaoh's armies behind them and the Red Sea in front of them, the Israelites faced their greatest challenge. The Bible says in Exodus 14:21, all that night the Lord drove the sea back. So be encouraged. God is at work even when you can't see. Hymnist George Matheson penned this long ago. Will I remain in God's house at night? Love him for who he is. Desire not the gift, but the giver. When I can remain during the darkness of night and worship, I've accepted him for himself alone. The point of that is, don't just turn to God when you need a miracle. Instead, focus on your relationship with him, and you'll get a miracle when you need one. Jesus said in John 15:7, if you abide in me and my words abide in you, you will ask what you desire, and it shall be done. After losing everything near and dear to him, Job's friend Elihu said to him, where is God my maker, who gives songs in the night, teaches us, and makes us wiser? Job 35:10. Jesus said in Matthew 10:27, what I tell you in the dark, speak in the daylight. So friend, be encouraged. It's in your nighttime experiences that the Lord stabilizes, supports, and strengthens you to go on to the victory. And that's our good word today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.